Hello everybody. In the current affairs this week, the week ended 4th of August 2024. This week, the stock markets scaled a high on 29th of July 2024, which was a record high, and the NIFTY crossed the landmark level of 25,000. But by the end of the week, the market was flat in comparison to what it was in the last week. This was on account of some kind of a correction and profit taking. The global commodity markets, the noteworthy part was that the Brent crude corrected very sharply. Brent crude closed at $76.81 to a barrel. This is in contrast to the level of $86 to a barrel on 22nd of July 2024, the day before the announcement of the union budget. Any correction in the price of Brent crude is a good news for India because its major energy needs are dependent upon imported crude. The 10-year GSEC yield in the US declined very sharply from 4.19% to 3.79%, which is a correction of more than 10%. This is on account of expectations that there would be a rate cut in the US very soon. Nasdaq declined by more than 3% and S&P 500 corrected by more than 2% on account of earnings of various big-time corporates which came much below the expectations of the market. This week, I had a meeting with a prominent fund manager. During the meeting, we had a discussion that India, as we all know, is growing at a real rate of 7%, and there is an inflation of around 5%. So on an average, the economy is growing at around 11 to 12%, which is the average. So, according to him, if the large caps grow at a rate which is below 13% on an average, mid caps grow at an average of less than 21%, and small caps, if they grow at an average of less than 28%, then the market levels at which these benchmarks are, or the market is in respect of large, mid and small caps, is not sustainable, and then the markets can correct. And any company which is growing at a rate of less than 11 to 12% is underperforming the average economy. So these are the things which we always need to keep in mind when we are looking at any corporate results, and on the basis of that, we will be able to decide whether these levels in the market would be sustainable or not. This week, there was an approach paper which was released by the government on Viksit Bharat. According to that approach paper, our country has to grow between 7 to 10%, 7 to 10% real growth for a period of at least 20 to 30 years. It is only that after our economy, which is today at a size of 3.36 trillion, can become 30 trillion by 2047. And if we want to get a tag of being a developed economy from a developing or an underdeveloped economy, then our per capita income, which is as of now $2,392 per person, has to scale up to $18,000. And this can happen, as I said, if our country grows at this pace for this long a period of time. And we should all gear up to do that, to see that the dream of India being a developed country comes true. This is all for this week. Thank you.